And for more on MDA Space's earnings and key drivers for the stock, joining us is David McFadgen, Managing Director, Institutional Research at ATB Cormark Capital Markets. And David, thanks very much for joining us.
Thanks for having me.
Okay, we heard about the backlog, $4 billion. It sounds good, but it missed on, it was 4.4, I think was the estimate.
Well, 4.4 was in the prior year, so this year was 4. We were expecting it to be down because the company hasn't announced any significant large contracts over the last 6 months. So that was not unexpected that the backlog would drop a little bit. But I think what's driving the stock today is a better than expected quarter. Revenue was up about 50%, EBITDA was up about 50%, both beating consensus estimates. And then the other thing that people were really focused in on was the pipeline. So the pipeline, MDA reported a pipeline today of $40 billion. The last time they updated their pipeline, it was $20 billion. So that's obviously up significantly. And so when people see that level of pipeline, they are quite excited about the stock.
And is it reason to be excited? Are you excited about that?
Absolutely. I think there's very high potential that they're going to convert a lot of that pipeline to the backlog. So the backlog are signed contracts that will eventually be reported to revenue. So I see tons of catalysts, contracts that they're bidding on. They're probably going to announce them this year. I think there's a very high probability that they will announce some contracts with the Canadian Armed Forces or the Canadian government. You know, Canada came out with its industrial strategy, defense industrial strategy, and in that strategy, they want to rely on key Canadian companies, and MDA would be one of those.
And is that their best opportunity, or do you feel there's some bigger opportunities elsewhere?
There's, well, that would definitely be one of the bigger opportunities. There's potential for a Eutelsat OneWeb contract. Eutelsat's going to put up a new constellation for OneWeb. They have to be competitive. So MDA's in the running on that. They'd probably have to buy a European business to be more serious contender there. MDA is also part of a consortium in the U.S. That's bidding on a manned lunar terrain utility vehicle. That's a $4 billion U.S. contract, which could be announced at any time. So if that consortium wins, that'd obviously be quite substantial for MDA. And then also, MDA is in discussions with the Korean government about building a military constellation. So if MDA is able to secure that contract, that would be very significant for the company because in the past, all the constellation awards have been for the commercial sector. So if it was able to win a military constellation with the Korean government, that would open up a whole other addressable market for the company, and the defense market would be multiples of the size of the commercial opportunity.
I want to ask about that, but I also just want to ask about the U.S. Any concerns with the tension between the U.S. and Canada being a factor on any of those contracts, or MDA being hurt by it?
No, I don't see it. MDA announced a deal or a contract with the U.S. military where it's going to be in a position to be able to bid on contracts for the Golden Dome. So the fact that they were green-lighted to bid on that gives you an indication that there's not an issue here. Okay,
and then the balance between defense and commercial. Would you like to see that? I mean, obviously you both want to be growing, but is it good that they're focusing on defense or seeming to focus more on defense right now, or should they have more of a balance?
Well, they're going after both the commercial and the defense market. What we're seeing now are space-based assets have dual use. So they're going to be used for commercial purposes, but they're also going to be used for military defense purposes. So I don't think you really want to say you just want to go after one or the other. You want to go after both. And more space-based assets are dual use.
All right. And we've talked mostly about the opportunities and everything. I just want to go back to the guidance, and you thought it would have been higher. What was the most disappointing number then that you would have liked to have seen bumped up?
Well, they gave guidance that was in line with the street. We're on the high end of the guidance range. It would have been nice to see the guidance up a little stronger, but I think the MDA is just being conservative. They have a track record when they issue guidance at the beginning of the year, then mid-year they raise guidance, and then when they finished the year, they beat the numbers. So if you look at 2024, they beat the numbers. If you look at 2025, they beat the numbers. So this is just a kind of a recurring pattern where they set the bar low and then they move it up throughout the year and then they eventually end up beating. So I think that's what's going to happen. So we're going to stay at 370 million of EBITDA. That's at the high end of the range. I'm comfortable with that. I'm absolutely convinced that they're going to be announcing some big contract awards this year, and one of them could be from the Canadian government with the Canadian Defense Industrial Strategy.
And I mean, with everything that's unfolding in Iran, is that a headwind, or are there other potential headwinds right now?
Well, I think, look, it's well known that NATO defense spending is increasing, and the target is to get to 50%, to get to 5% of GDP. And so I think MDA will be a beneficiary of increased defense spending.
Okay, we'll wrap it up there, David. Thanks very much for joining us.
Okay, thank you.
David McFadgen is Managing Director, Institutional Research at ATB Cormark Capital Markets.